Good afternoon, everyone. Today is September 30th. This is Monday, the last day of the month and the last day of Q3. Our goal here is to review the market generated information in a holistic fashion. We're intimately following the auction's narrative for both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. Please see our uploaded recording. It contains some of my real-time analysis using it as a tool for my professional development. Okay, perfect. Let's get started. So again, this is the last day of the month and the end of the quarter. We had a lot of information kind of going on today, whether it was the rate cuts for the month and just some kind of like some news overseas for China, geopolitical tensions, all kind of stuff kind of going on for this month of September, and just a very busy end of the quarter. So again, Q4 is approaching. So before we kind of get ahead of ourselves, let's just follow our typical questions. But before we do, let's look at the monthly candle. This is the way we end it. So again, we'll look at a little more nuance here shortly. Very strong finish closing near our all-time highs. And then the NASDAQ, though not at their all-time highs, they did close above the prior quarter. So again, solid finish. All right, let's go to our typical process. We'll look at the month for both. So where's the market coming from? And what is price trying to accomplish? So again, there was very light data overall today, but we did have Fed Chair Powell speaking today. Uh, so again, not too much for the earnings. We did have Powell, which this was, I feel like everyone was kind of in the dark of what was supposed to happen here. We wasn't sure if it was going to be any kind of Q&A or what was going on with that, but again, we won't get into the weeds of the fundamentals. But we did have Fed Powell speaking today, essentially at 11 o'clock, and the market was very much anticipating that, unsure of what it may look like. So again, just to understand where we are from the monthly, which is now finished, and then the weekly, which is beginning, and then the daily. Again, we have this same 2-week balance range. I know we're kind of getting tired of talking about it, but we look below and then we went above, and it appears that we're finding some continuation above. So again, the buyers, since they're in control on all time frames, they ideally want to do another higher high and retain their lower low. So we can continue our one time framing because Friday ended with an inside bar. So we had an explosion to the downside that ended up testing the FOMC high, essentially, and there was no continuation from that point, which is what we've seen 1, 2, 3, 4 times now for the S&P 500. The Nasdaq has only retested the area, their FOMC, I believe, once. So the buyers really want to have a new high and retain their lows. That didn't happen. So we'll look at the context of what happened there. Again, same situation for the NQ. We have our monthly, we have our weekly, and then we have our daily. So again, they were a little weaker. They did look below their Thursday candle and close lower. And then they found more downside today and very limited upside. So kind of say what you will about that, but they did reclaim they're still in control of their 5 daily SMA, with the S&P 500 looking below and closing well above, almost near their all-time highs. So again, looking at the one that performed weaker, which would be the Nasdaq, we still have these same damn sellers that are here and just really pressing things down. We finished almost 5K negative, with the minimum for the day being negative 5,600. So again, a lot of sellers got caught off guard. We were actually watching this in real time for that Fed Chair Powell Q&A meeting. I wish I would have recorded it, but coulda, shoulda, would have. So again, like a high normal variance for this day, really can't glean too much from here. We'll need a little more context. So we'll look at the intraday and everything else. Looking at the S&P 500, it's going to be the same case, except they close much higher. And again, a lot of their volume was near the midpoint, but they were able to push above and try to make a new high, which I need to double check to see if they did or not. I don't believe they did. And they closed near, the top third of their range. So very solid day, just looking at this. Notice the delta was negative 28K. And again, this was like during that Fed Chair Powell, and we were just really pushing and people were believing this is it, this is it, this is it. and then completely got reversed. But again, we'll look at that in more context a little shortly. So again, we did have the data release for the PMIs, which is at 6:45, not really too much. We had Fed Bowman speaking earlier, but the big event was primarily Powell. And again, looking at we saw how we finished for the footprint and just for the daily candle as well. So just understanding where we came from for the day, we finished about 40 basis points positive, with discretionary actually being red, which we haven't really seen too often. They've really been holding things down. They're actually the leader over the past month. So it's just interesting to see them turn red. I'm assuming some of this may have been profit taken and some of the money kind of being distributed elsewhere. It's very nice to see financials and healthcare finish green. Financials was getting their ass kicked earlier today, if I recall. Um, and then same thing with the healthcare, though. Eli Lilly was kind of showing out, doing really well earlier in the day. They were the main ones that were just kind of holding things down from a little earlier in the session, from what I recall. But other than that, just very decent day, just across the board. Um, yeah, just really good showing. But this is really key to see financials and healthcare, and even technology. Just kind of chilling. And I don't want to look too deeply into this discretionary because this may just be profit taken. Again, if you look at it from the past month, you have them being the leaders, and everyone else kind of putting their fair share of the work in outside of the healthcare. Even looking at the quarter, you can just kind of take a snapshot and look at that yourself. All right, perfect. All right, so let's look at the market profile for the one who performed not the best. Looking at the NQ, again, we have our monthly profile that's sitting here, and then we have our profile that goes back to the beginning of April. So again, we talked about the monthly shape a little bit last week on Friday. Essentially, we're just stuck between this value zone. We're doing the majority of volume near the highs, but we did have a fair amount of volume in that midpoint as well. So kind of say what you will there. And we finished the month near the volume, near the VPOC for the month. So again, the majority of the volume was taken above these 20Ks, and the fact that they were able to hold above the 20K is very solid showing for the NQ. They possibly may be doing a situation where we push above, find some sort of support, and ideally want to push a little higher. Not surprised if we do leak a little bit lower, but they really want to get away from this high volume node here for that composite. If we're just looking at the territories, I don't believe there are any kind of singles. The action was a bit wild earlier today. Let's see, no singles, a little bit of excess at the bottom, but it's essentially just a high normal day. Really not too much to speak of. They're still flirting with that high volume node zone, and we're kind of just stuck there from what I can see. And then giving the same respect to the S&P 500, again, they have this value zone for this composite. The VFOC being here towards this mid, but we essentially want to call it this here, given the monthly profile that just hasn't been merged yet. So again, multi-distributed here for the monthly profile. The majority of volume being taken near these highs. Between the just around the 5700, between the 5800, just a lot of volume done here. And that's essentially where we finished our days above the 5750s. As we came down to the 5760s, there was no kind of continuation at all. So again, we have that same behavior where no one really wants to sell at lower prices. These are considered cheap, and this shit is being bought up to the points where we're just kind of exploding through. We actually left a little bit of a singles area here near the 803s, and that's already been taken in the overnight session, so we won't even mark that. So again, solid close overall. If you merge these two together, really not too much to look at there. Oops, sorry about that. But again, just a lot of volume near these highs, near the 5800. So again, solid showing for the buyers, really keeping volume higher and finishing strong as a whole. All right, perfect. Let's look at the intraday. All right, so that same structure that we were looking at with the NQ, same situation here. We're just looking at it on 138 minute. Really not too much to say. Very impulsive to the upside. As we essentially start our month from around this area, shoot down, shoot back up, coil, shoot back up, coil, and we're just kind of just just really just sitting sideways, very similar to August and that rally base rally patterns that we were seeing. So same thing here for September. So again, solid showing, higher lows, higher lows, higher lows, higher lows. Really just the whole time. So again, they may not be as strong as the S&P 500, but again, they are showing out in their own way and doing solid as just doing solid. Again, very strong way to finish their day. And then looking at the stronger of the pair, this would be the S&P 500. Again, remember they're at their all-time highs. We tested lower, and then completely ended up blowing through and holding. Again, strong showing. Same behavior, rally-based rally for the most part. Really not too much to show there. Fairly simple. Okay, so I thought it was pretty interesting the action that we saw today as we headed into Powell. Again, sideways, sideways as we headed into Powell. We ended up squeezing lower and ended up reversing and almost taking out the highs of the prior day, which was Friday, but not quite. So again, you really can't see too much here from the 65-minute. Again, lighter data, lighter volume throughout this whole time, and then a big volume spike here with a big minimum of negative 18,000, finishing at negative 8,000, at negative 9,000. But look where the candle closed. So you have like a lot of shorts that are just underwater, not including the other shorts that are feeling pressure from earlier in the session. Again, you really can't see too much from the 65 minutes, so we'll go down to the 30 actually. So again, we just essentially just going sideways here as we head into the Powell session. We ended up breaking lower, and again, it's that same delta that we were looking at. Yeah, the sellers here and here, but they ended up finding the buyers down there, and once they did find those buyers and they pushed up, they tried to push back down, but no one really wanted to trade. You know what I mean? They were just really looking forward to covering or just new money buyers. I actually pulled the GIF. This is kind of what it looked like. They were just kind of pushing and pushing. They ended up finding Godzilla, if you will, and now everybody just started running out the door. Basically, everybody just wanted to like, oh shit, we need to hurry up and get out of here and cover. So that's essentially what happened here. Push down, pushed up, and it was like, oh shit, we're in trouble. And then you just had a short cover on the rally, just a nice squeeze. So again, this is really cool. We're looking at this in real time. I wasn't looking at the footprint. I was looking at this on the DOM. This was just cool to see. I wish I would have recorded it. So, forgive me. So it doesn't look as cool on the NASDAQ. The NASDAQ was a bit weaker. They did make a new HOD and they did close above it. But again, this looked much better on the S&P 500. So, we're not going to spend too much time there. All right. So looking at the actual 3 minutes, 3 minute bars. Again, we had get our little context here. So we have our Wednesday night over session, and then this would be the Thursday, right? No, this would be Wednesday. So yeah, this is the Tuesday night over session, and then we have our Wednesday, and then we had that big drift up. And then of course on Thursday, we ate up all of that, broke that overnight low, bear flagged, and then we've been trading under the prior day's IB low twice now. So as we're having these bear flags, weaker closes, we're still consolidating in the overnight session. It's like, okay, so this does look a bit bearish. We're already, trading below the prior day's LOD as the market is almost opening. Pretty low, pretty weak. And again, this is the NASDAQ. So you would assume this is going to be a bit bearish. And indeed it was. You know what I mean? As we're waiting for the market to open, we're just really just consolidating. We're just kind of waiting for Powell. And then when the market does indeed open, we shoot up, but we're unable to get to the overnight high. And we're essentially just sit sideways. Ended up getting kicked down below the VWAP, the RTH VWAP, and the 5 smoothing average. This looked a bit nice in real time. You would think that, hey, this may be an open drive. We're driving out of this location, trying to go to the overnight high. But I mean, that's just not what happened. So I mean, this was already a warning sign. Just looking at this in the vacuum without looking at the S&P 500, um, this wasn't the best showing for them to end their session here for the A bracket. B bracket, new low, trying to go back to the open. And even once we did get to the open, it was a lot of two-way trading from what we can see. Failed to make the new high. More two-way trading, back to the open. Try to get back to the mid, can't hold it. And then this is when we had our PAL event when we came here. So again, it's more of a conference, more Q&As. Seemed really casual, so like no data release or anything like that. This seemed to be just an opportunity for us to sell, because again, this is still lower highs and lower lows from what we can see. So as we failed to take the overnight high, we failed to make a new HOD, we failed to reclaim the initial balance mid. That is what warranted us to take this new low. This also right here is probably like a possible trade breakout, because this low here, with all of this activity that happened, we haven't revisited this low since then. And then this low was only a few points away from the overnight low. So you expect some kind of continuation. That's exactly what we got. I'm not exactly sure where we're headed in this particular area for the NASDAQ. This was the FOMC high for the S&P 500. So we'll look at that shortly. But again, you had the leg down for the Powell event, and then this was a reclaim of that 5 smoothing average, and then just per our playbook, they were able to hold above here, and any squeezes below were bought up, any squeezes below were bought back up, and we just trended above this, really until the session ended. So again, a strong close, and they close um, above, well, essentially near their initial balance high. So again, strong close for the tech. Um, when you're looking at it in the grand scheme of things, this is still that same bear flag. We're still in that same range, so this is still a bit weak for the tech side of things. But you want to give credit where credit's due. So the S&P 500 is a little different. Same situation though, with the rally overnight, and then the break below that zone, and then we're just essentially bear flagging. Um, really not too much to say there. We did trade below the prior day's low in the overnight session, but we quickly tried to get back into this range, tried to force our way back up, but there was no continuation there. Found our leg lower, so hopefully you're staying with me. I think I'm looking at the wrong chart book, right? No, I'm not looking at the wrong chart book. So again, that same open auction where you shoot up and go down. Notice this was definitely like an open drive from what we were seeing at first, but as time kind of played out, we saw that we were just kind of sitting sideways. We ended up closing near the 50% mark of that initial candle, the opening candle. Um, Really not too much to say there. You had like a nice engulfing candle here. You would assume that this may be the reclaim of this 5 smoothing average. I was kind of stalking this in real time, but there was just no kind of continuation, and we just slowly grinded our way lower. There was like a reclaim of that area, and we had like a small trend up, but real erect legs to no real erect legs to push above. We kind of just coasted, channeled above this 5 smoothing average. And then once we had a small leg below and tested through the VWAPs, through the IB mid, we had our reclaim of the 5 smoothing average again. And again, just more two-way trading through here. Even looking at the high at that time, you had a little bit of a look above, and then we failed. And then when we revisited that same zone, we actually broke through for the PAL event. Same situation as the NASDAQ, just kind of broke through once we broke this low that we haven't seen, which is near the high 70s. We found there was no real buyers, a bit of a bid pool. They were definitely forcing things down. I'm curious what this looked like with the trade bubbles. So yeah, exactly. Yeah, you can see them just really pushing to get to this point, and then kind of like a bid pull here. It got really light, but they were definitely trying, and buyers kind of stepping in the entire time. So again, we did hit that FOMC zone. Again, we barely just barely hit it, um, or maybe just like a maybe like a tick or two above. And then as soon as we hit that, just immediately impulse back higher. So this should have been scary as hell for any shorts that were kind of pushing. It only took us once we hit that zone, it took us 3 candles to get above. And then the same thing, just much more aggressive slope upwards. Um, yeah, very typical. Any looks below the 5 smoothing average above this trend are bought up, bought up, bought up. And yeah, that's really it. They closed well above the initial balance high, and they were able to eat up into some of the range from uh, Friday as well. So this is something that buyers really want to hold for sure. For sure. So looking at the actual trades, this looks a lot better in the 1 minute. This is what we were looking at in real time. So again, it's happened at 1 o'clock. So I'm not used to having my my scaling out that far. But again, once we hit that FOMC zone, we couldn't retouch it. And as soon as we reclaimed that 5 smoothing average, it was a fucking wrap from there. We had one attempt to kind of close above, and then that was immediately reversed. And then it was on to the races from there. Again, any kind of legs lower were short lived. Once we made it through the IB mid, they just hugged this open zone, this open level, and then really just pushed it higher for the remainder of the day. Pretty simple, short squeeze, not too much to talk about there. So again, really not too much. You really wouldn't be too enthused to look for buying when you're below the prior day's range like this. But given the context of this zone here and then our specific playbook, that we have for these 5 smoothing average reclaims, this made sense to us in real time. So that's definitely going to be the trade there. And then even just the breakout the breakout or the breakdown from that this open, excuse me, this low that went 3 or 4 hours without being retested. Just given the heat and the velocity that we were coming down from that Powell event, um, this made sense in real time. Looking at the ES, and then the same situation for the NQ. If you even break this down into 1 minute, same situation there. Maybe not getting onto the situation as soon as it breaks, but once it has a small pullback, put another breakout stop below here with the stop below this entry candle. This one made sense. And where you would target, I'm not sure, and that's something that we'll need to work on. But again, I won't belabor that. So the buyers for the S&P 500, will give them like a 9 out of 10, to be honest. I just didn't really care for their initial start. But again, the fact that they were able to really short squeeze and get everyone off balance, especially not including the other delta from Friday for the S&P 500. We have a lot of sellers that are stuck here, stuck near the 5800 and the 5780s. So again, this can get really bad for sellers and easily squeeze back above. Just saying. For the Nasdaq, we'll give them maybe a 7, relatively a bit lackluster opposed to the or compared to the S&P 500. So kind of say what you will there. I mean, yeah, and that's pretty much it. No real surprises. We went over the plays of the day. I think this week is going to be important as we have some more data tomorrow with the PMIs, the 7 a.m. data as well. We have 3 drops. And then, I mean, you can look at the economic calendars for yourself. And then we have the non-farm payrolls. It's going to be an interesting week for sure. Next week is CPI, but that's a conversation another day. I'll go ahead and stop it here. Thank you for watching. And yeah, I mean, if you have any kind of suggestions or any thoughts, please feel free to let me know. All right, take care.